Hi, and welcome back to yet another exciting episode in Robinhood School of Traders. First of all, my sincere apologies. There has been a delay in my making video for almost in a gap of 25, 26 days. So I beg your pardon for this. But nevertheless, this video will make all the negative grievances which we have. In today's video, we learn the correlation of Nifty uh, with Bank Nifty, Dow Jones, how it behaved with dollar index, the crude oil, the gold, and India VIX. And purposefully, I've not added FIDI data. We all know the FIDI data for last 15 days has been negative. At least the FIs and police, some other DIs are supporting the market. Nifty has also a direct strong correlation with PCR and option chain. So this FIDI, PI, put call ratio and option chain we will discard for this video. Else the video will become very lengthy and will become uh, it will be very harsh to find a correlation between this. So right now our objective here is to find a correlation and see how does Nifty behave with the movement of this four big pillars. First is your Bank Nifty. You try to find out how does it behave. Dow Jones, we all know Dow Jones 30 have taken. Dollar index, the performance rupee to dollar. Crude oil, we are low. The gold, which is the all-time highest, and India VIX, so-called a fear factor. So let's get started. I'm sure we'll all together enjoy this video and we'll make a meaningful use of this video. Robin, why you make this video? This video is of a three segment. One, those who have made a very strong money by buying puts or selling calls. So they have made the money. This video for those guys whose portfolio is running at a loss of maybe 20 to 25%, and they're looking wherein I can do uh, give a support to the particular respective stocks, or in other terms, how can they average the stock. This video is helpful for them. This video is also helpful for intraday. So we can find by 908 pre-open market where the sentiments will move. So these are three pillars for videos. One who have made money input, no doubt they have made money, or selling calls. And this video is primarily for those whose stocks, whose portfolio has gone negative. Though they will say now they have gone long term, but what is the part time they can venture again so that they can make have a profit in short term. So let's see. This is the final chart we will come into it. We will first try to find the correlation of this is the Nifty. How does Nifty behave with Bank Nifty, India VIX, dollar index, Dow Jones, and crude oil? First of all, I have to thank investing only because this six charts you get only investing.com. So you can use this chart, and because trading will not give 1 plus 1 free of cost, and platform like Zero the Upstock will not give you the Dow Jones, the dollar analysis. So this is the final chart will come to you, and we will try to understand what implication of all these big factors and how does Nifty behave with that. So let's see. We have seen a Bank Nifty has a very strong correlation. So by the way, there's all these points I've taken from internet, and these are all control C control V. This is not a single iota word of change because I don't want to give my interpretation to Nifty. This is a typical cut copy paste from the internet. So Bank Nifty has a very strong correlation. We has a correlation almost in the vicinity of 0.9. Anything which is crosses zero point 0.8 has a considered very strong correlation. So Nifty and Bank Nifty goes hands on hand. So if Bank Nifty increases, high probability Nifty will increase. Many a times Bank Nifty indicates it acts as a leading indicator compared to Nifty. But this is not a thumb rule. Many a times it comes vice versa. Most of the cases, Bank Nifty will act as a leading indicator. That means if the Nifty is going in 15 minutes time frame and sorry, Bank Nifty is going in 15-minute time frame, Nifty is somewhere trying to move. The high probability it will be in line with Bank Nifty. We all know this. India VIX has a strong correlation with Nifty, so there is nothing too new. This is something stock shocked me. While Nifty and Dow Jones do not dance step by step, They simply go to swear to the music of global economy. So they will go by the economics. That means Nifty and Nifty and Dow Jones. I thought before this video has a strong correlation, but when I saw the chart, I was stunned. So these Nifty and Dow Jones will behave according to their pattern and according to the global economy. So though there is a relation, but there is no strong correlation which you see in the graph, which we can interpret. But looking at this confidence, investor or trader can accordingly. Now, this is again a strong thing. According to a study, when gold prices rise, stock prices tend to fall and vice versa. This inverse correlation is observed across different economics, making gold an attractive investment. Though the statement is from net, but most of the time there is a inversely. If you take if this is Nifty and suppose this is a gold, so these are inversely correlated, but it doesn't mean that there's a huge strong correlation. Most of the time, 70% time there's an inversely correlation, but 20% of time gold and Nifty goes hands on hand. So as we can see a strong correlation of Bank Nifty with Nifty, we can see a negative correlation with Nifty. So we can also say for the time being, gold has a strong correlation with a Nifty. Again, it's a surprise to me. It's a myth that rising crude oil has a negative impact on economy in equity market. In fact is that both these asset classes have continued to follow the respective trend. Again, I thought I had an impression when the barrel price goes up, the economy will come down, but this is not the fact. I'll show in the chart and prove it that both the indices will behave their pattern. This is quite interesting. Dollar index. We have seen the dollar index is negative, but this is good explanation. If you say if the FI wants to invest in Indian market, they have to convert US to INR, which would cause the dollar value to decline or Indian rupees and vice versa. When they liquidate the investment, they have to come convert INR to USD, which would cause dollar value to shoot up. So this is which are facing in the present scenario. So as the FIs are moving out, the dollar is shooting up and the rupee index, our Indian rupee, is weakening. So these are the 1, 2, 3, 4, 5, 6 pillars on which our discussion will start. So if we make a strong, simple chart, I plotted a 1 hour daily chart, same time frame, almost same candle I've taken, length of the candles. On daily time frame, you can see Nifty and Bank Nifty almost they act like as we studied, it has a strong relation of somewhere between zero point 0.8 to zero point 0.9. So we can see Nifty and Bank Nifty goes hands on hand. So this which our statement confirms. Now, if you see, this shocked me. This is Dow Jones, right? So generally, if you see over here during the this period of time, they also go hand in hand, but not a replica or a strong relation as we had in Bank Nifty. Over here, see, it has made a lovely M pattern over here, then a waterfall, right? Then again, so it the Dow Jones behave the patterns more beautifully. You see this M pattern over here. This is a W. This is a breaking of W. This is a simple W pattern, right? Right? And again M pattern over here, and again the fall. Now again is trying to make a some sort of a W. So yeah, though they have a strong store correlation, but they are not absolutely correlated. So we can blindly go by taking a trade on the behalf of how the Dow Jones has performed and vice versa. Now this is a very strong chart. This is I think we can make by using information we can money. This is the VIX and Nifty 50. So we can see whenever VIX comes from this particular range in the vicinity of 13, there is always a pullover. There is a bounce back to the 16. So you can use the information. Or when the VIX is setting a tottering high of 19, this is for last 6 months I've taken the chart. Though the screen will show a little bit data. It's my observation. One should be ready when the Nifty is going in the vicinity of 90, simply short it. And when the VIX is somewhere within 13, 13, and 13, that is the time you can buy by looking at the pattern or looking at any kind of indicator. So we can see a very strong inverse correlation with Nifty and VIX. Now let's see dollar, which we so as we said, as the FIs are moving out, hence the dollar prices are keeping a thrust. This is a strong correlation between dollar and Nifty. This is a juncture where Nifty started to fall, and this is the juncture where dollar started to move from 84.5 rupees. It touched a hovering high of almost 88 rupees. This is a big concern for our economy. This is also a very big concern for weakening of economy. And this one can use information at according. Now, Robin, what are these two lines? These are two nothing nothing. This is I've taken a short term EM in 9 and 21, and though it looks pretty good in the chart, but now when to trade, what to trade. So as per this chart, if Nifty closes above this, we can go for the long, subject to on closing basis. So over here, I will not discuss what to, when to buy, when to sell. This is something we can find a correlation. We can find an inverse correlation between dollar to Nifty. Now let's see one more chart. This again to me surprise. I thought crude oil has a strong inverse correlation. Yes, it has a strong inverse correlation, but most of the time we have seen for last, if you say for last 2 quarters or 6 months, this has a very strong inverse correlation. But we go to history, it has been seen these two indices will behave according to their trend, according to their economical factors. So they don't follow each other. But last 2 3 quarters, if you say, we can see a very strong inversely correlation between Nifty and crude oil. This is I've taken a gold future of this is a I've taken May futures and the data has been not right. Nevertheless, I was trying to have March future. So if you see Nifty in the March futures also, a gold price has touched all-time high of 88,750, and Nifty has just recovered, tested 22,000 and trying to bounce back. So this is a strong correlation you can see, inversely correlated between gold and Nifty. So guys, this is the same thing I plotted in different time frame. We can see this is a Nifty and it has a inversely correlated, though chart is not hitting in the face. So this chart is not in the face, but VIX you can see as inversely correlated. Bank Nifty we can see is directly correlated. Gold is against inversely correlated, and crude oil right now is somehow in sync with Nifty. That means crude oil is also falling, and somehow your Nifty is also falling. Now, if we do the same chart with investing free of cost, then you can plot USD INR and Dow Jones. So guys, what a strong, if you can use information, though this information is index specific, but one can use indices where the stock has a strong correlation or strong anti-correlation with indices. So one can take the trade looking into these factors also. I'm repeating it once more. Though in this index, in this paper video, I have not taken the FII DII data, the put call ratio, and the option chain. I've taken a macro. I've taken the micro. I've looked at the microeconomy. This is a macroeconomy. So this will also give you a picture when to buy the stock or when to hold or when to sell. So this is just a summary. So today's video we found out the correlation of Nifty with Bank Nifty, Dow Jones, India VIX, crude oil, dollar, and gold. And thanks to for watching this video. And if you have any question, do write to me or call me. And this is what we do. We try to teach you to make over 3,000 to 4,000 on daily basis. I sincerely apologize. This video has gone a bit longer till 15 minutes. Hope this information will help you in taking the trade. Thank you.